The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the February 28th. How about that, folks? Already through February. Fantastic Friday edition of today's opening bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools, well, just simply the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, truly that's what it's all about. So let's go look at one of our tools. This is the tool I call holding on to grievances is a decision to suffer. You know, for many years, an old farmer plowed around a rock in one of his fields. As each year passed, he grew more and more upset about this rock. After all, it had broken two plows, a cultivator, and it took up valuable land. One day, the farmer decided he would dig out the rock. So at first, he took out a crowbar, slid it under the rock, and it was then that he realized that the rock was less than a foot thick, and therefore he could loosen it and haul it away with his wagon. Now, while hauling the rock away, the farmer smiled to think how all through the years, this rock had haunted him. He began to think that maybe, just maybe, there were other areas of his life that he was holding on to, similar type thoughts and feelings that were like rocks in the middle of his mind field. So one by one, he began to take his past experiences, reflecting on them and following through with whatever appropriate action, and I'll say massive action, was necessary to remove the negative thought. In other words, to lose them and let go. Now look, some of us may choose to hang on to old painful thoughts as though they were treasures. I say bury those types of treasures, folks, and good riddance. After all, they blur your ability to see the good that comes from every difficult situation that we face. Look, granted, each of us have experienced difficult times, painful situations. However, it's unnecessary to remain locked in negative thought, for we alone, you and I, we are the ones who control our thoughts. You know, the Dalai Lama, he speaks of the power of forgiveness in his book, Freedom of Exile. If you haven't read the book, it's a great book. Go read it. And he uses these specific words. He says, learning to forgive is much more useful than merely picking up a stone and throwing it at the object of one's anger. Think about that, folks. Forgiveness, much more useful than merely picking up a stone and throwing it at the object of your anger. For it's under the greatest adversity that you and I, that there exists the greatest potential for doing good, both for ourselves and for others. You know, a mind that is occupied by positive thoughts, well, they blossom like a beautiful garden, free of weeds and negativity. Whether your mind portrays a beautiful garden or a weed patch, well, it's up to you. Let's go check out the garden of the markets out here. Right now, we've got the Dow futures. They're flat out here. They're trading down 2 points. Trading out at 16,269. S&P off a quarter, 3/4 of a point. Trading out at 1853 and a quarter. NASDAQ off a half a point. So we got a flat market out here. Not flat in U.S. dollar index zone. That's off about 486 pips out here. It's down 48 cents. Trading out at 79.82. Big move in the euro. We'll take a look at that currency pair, see what it's going to bump its head against. We've got the gold is off $2 right now, trade on to $13.29. Silver off about a penny, so no big deal out there. Light sweet crude off 41 cents. It's trade out at 101.98. And our call-in number is 877-927-6648. A quick peek at the markets around the globe out here. Not a lot going on there, so it's going to have to be the U.S. that's going to be sponsoring and throwing the party here as we end February 28th. And a party we should throw. We should say happy birthday to our man Polar, to David White. Unfortunately, his birthday is tomorrow, and there is no February 29th. So what to do about that? Well, we'll throw him a party here at TFNN. Over in the UK, the FTSE is up a point. The DAX is up 27 points. The Nikkei last night was off 82 points. That was down about 0.5%. The Shanghai up 0.4%, up 9 points out there, closing out the week at 2152. The Hang Seng basically flat, up 8. So where do we begin? Hey, there's only one place to begin. Well, there's many places we can begin, but let's go take a look at the euro, Japanese yen. We've got to focus in on the currencies out here. Take a look at what's going on. So if you're watching this on Tiger TV, and I hope you are, that's a wonderful thing. You're going to take a look at my chart here. Maybe you're listening on your mobile device, a smart-type phone out there. And what you can do is you can go to the homepage at TFNN.com. Upper right-hand side, you'll see a button, 3 little smartphones on it. Click on that. You'll see the streaming chart here. And, of course, if you'd like to see this chart in HD, just go join the Tiger's Den. Now, the euro, Japanese yen, it's a daily chart that we're looking at. You're taking a look at 2 different patterns. One kind of a purplish color. That was the 0.618 Gartley buy pattern. That Gartley buy pattern formed and completed here on February 4th. Of course, our market bottomed on the next day on February 5th. How important is this currency pair? Just about as important as anything that you could want to track out there, because you want to know what's going on inside this currency pair. Now what it looks to be poised to do is to move topside, to go ahead and make a 0.786 Gartley sell pattern. Perhaps. We'll see what happens. If it can clear the swing point out here, and the swing point that it's dealing with is February 21st right now. That high is 141.258 out there. You're trading below it. We'll see if it can take that on. It's got every indication, should have every indication that it can go ahead and motor forward out there. And if it moves higher, what our markets ought to do is tag right along with it. So you could see the U.S. throwing quite a party even today out here, because the euro Japanese yen does have the clearance to move higher. But we've got to go pay attention and see what the euro's doing against the U.S. dollar and the Japanese yen as well. But in this case here, it looks pretty good. Now, with regard to, you know how it goes with regard to Gartley patterns. You've got 5 different outcomes out here. The first outcome is your 0.382 retracement. Well, that has been able to be formed very easily inside this currency pair. That says 142.06 is the next level. That's your 0.618 area. But really, there's an A to B equals CD to the upside that's being formed. That's why I'm using that 143.73-ish range as our target for the euro Japanese yen, and that would bode very well, should bode very well for the U.S. markets. Now, let's go take a look at what's going on inside the other currency cross pairs out here. Let's take a look at the weekly chart here for the euro U.S. dollar. Now, it was at 5 a.m. this morning when the inflation numbers came out in the Eurozone, and that went ahead and spiked the euro, moved higher. We'll take a look at an intraday chart. This is a weekly chart. We're going to take a look at some longer-term charts out here. We must, because February is coming to an end, and, of course, it's the end of the week out here. This is the weekly chart for the euro U.S. dollar. It has not broken through resistance. Resistance overhead, big significant resistance. In this case here, how did it do it? It's run smack dab right into both horizontal and diagonal resistance. The horizontal resistance, that was set up by the big bearish engulfing candle that formed here, or formed on November the 1st. Yeah, it was November 1st out here. That says you've got resistance at the high of the prior candle, which it engulfed, which is 1.3831. That's your horizontal resistance. That's that red thick line going across your screen. The black line is your trend line. That's the big trend line that comes off of the highs back in July of 2008. Price has not been able to break above that. The last time that this area was tested was back here in the end of December, December 27th. It was tested before that, back in May of 2011. Well, tested again here as we speak this morning. And today, a break of this area would be very bullish for the euro U.S. dollar. We'll see if it can do that. If not, it's just going to continue to trade in this small little apex. Let's take a look at the intraday chart. Maybe that's going to be the easier one versus the daily chart out here for the euro U.S. dollar. We'll take a look at the euro Japanese yen as well. As we take a look at the euro U.S. dollar, see what it's doing. Here's that 5 o'clock session. Between 5 and 5:30, it was really right at 5 o'clock, and man, the euro really took off. Now, this is a 30-minute chart. It's in that extreme bought condition. That says it should just kind of work its way sideways out here. So maybe we've seen the extent of the move inside of the euro for the morning, because we know that you've got significant overhead resistance as we take a look at that weekly chart out there. And we can see on the intraday basis it's in the oversold condition, and it really needs to be able to work its way off there. If we take a look at any kind of expansions here of swing points on the 30-minute chart, what do we have? Anything that shows up of significance? Yeah, we do. Let's see here. If you come all the way back to this swing point, back at about 10 p.m. on February 18th. That's at 13.7716. You'll see if we go from that swing point high all the way down to the, oops, I grabbed the wrong tool out here. Let's try that one more time. If we go from that swing point high all the way down to the low that was formed back at about 4 o'clock in the morning on February 27th, you'll see you're traveling right at the point 1.272 expansion of that entire move out there, 1.3807. You're at 1.3811. It does say, though, and maybe during the day here what we'll see is just a slide higher into the 1.618 expansion before it then decides to back off, and that would be at about 138.52. So that's what's going on inside that currency pair, which is obviously a big driver as to the decline that we've seen inside of the U.S. dollar index. Now, let's go take a look at the U.S. dollar Japanese yen. Let's go see if there's been any kind of movement here. And really not. First, it was pushed lower here. This is the daily chart that we're looking at. This still has a Gartley sell pattern that could be forming, and that would require the U.S. dollar Japanese yen to move up to the 103.66 area. However, this could be forming. This could be forming an A to B equals CD down, which I've got here drawn in the charts. I'd have to move it just a tad. Let's go ahead and do that. And that's so you've got two competing patterns out here inside of the U.S. dollar Japanese yen. And the A to B equals CD down, which we cannot eliminate out here, would take us down to about the $98. So traveling sideways, a little bit of a consolidation out here. I could not tell you which way this currency pair truly does want to go. Now let's take a look at the U.S. dollar index. Let's go see what it is doing out here. As we switch over, you can see lots of pressure. It's taking out a B point. That B point has 17,000 contracts. That's on February 19th. And so far today, we've seen 15,000. It's taken out with volume. That looks like an A to B equals CD to the downside in the U.S. dollar index. 877-927-6648. Be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're new to TFNN, then you've probably heard some of our hosts and traders talk about the exciting charting program, The Art of Timing the Trade Charts. Tuesday, March 11th at 6:30 p.m., Dave White and Tom O'Brien will be hosting a live study session for anyone with a license to this exciting charting program. During this hour-long online workshop, Dave and Tom will lead a brief presentation along with taking questions from those that attend. Right now, we have a great deal for all new subscribers. You can sign up for the Art of Timing the Trade Charts and get your first entire month for only $1 while gaining access to this live event with Tom O'Brien and Dave White. For more information on how this exciting charting program works, you can click on the Charts button on the front page of TFNN.com today and check out some of the videos that walk you through a variety of the features included. Sign up now by taking advantage of this exciting offer for just $1 before it's too late. Visit TFNN.com today.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. As we end the month here of February, I do have the U.S. dollar index chart up on my screen. As we take a look at that wide-ranging bar to the downside, it's trading inside the swing point here from October 31st, 2013. What that says is really it ought to be able to trade all the way down to the low. So I don't know if that matches I don't know if that's the low that the U.S. dollar index is going to go after, or if it's going to. Yeah, it probably is. That's probably where the A to B equals CD down takes you to, about the 79.06 area. Now, big old can't really call that a bearish engulfing candle, because U.S. dollar index on a monthly basis here really has not begun any kind of significant up move. This has just been really traveling sideways out here. Nonetheless, there is nothing bullish about the monthly chart for the U.S. dollar index out here. Now, jumping in the pre-market here, we got Mercado Libre dollar-wise leading the charge thus far, closed at 94.23. Right now trading out at 105.61. They were out with numbers out here. Looks like their net revenues were up about 30%, up to $134 million. And their net income looks like that was up 35% to about 40 million shares. MELI is the ticker symbol. Let's go see what that is trading into. My recollection is they had some problems a while back, so let's go see what this thing is going to do here. Yeah, this thing had gapped down, had some volume off of the highs. Let me just clean up the chart out here in Mercado Libre's case. Let's see, where did this come back to first? Let's take a look at this. So this came all the way back to this little breakout session right here. Almost made it down to, this originally broke back in August of 2012 out here. Now, it did not get all the way down to the breakout. It would, if it got down to 77.11, it would have done that. Now, it's trading out, as I say, at 105.61. Where is that going to take us to? 105.61 is going to get us back into this swing point here from January 16th. 109.22 is the top of that area. Still in a downtrend for sure. We'll see if it can change its tide today. But big volume off of the highs back here on November 6th. Nonetheless, nice job on the numbers, both top line and bottom line. We've got Splunk, SPLK is the ticker symbol. They're trading out at 102.66, closed at 95.50. It suffered a net loss, larger net loss, by the way, 32 million in losses for the fourth quarter versus 6 million. Let's take a look at what Splunk is doing. SPLK, again, is the ticker symbol. So it looks like this is going to gap up. It most certainly is. So people are digging the fact that these guys are able to spend money out there. I say, just send it my way. I'll help you spend it. Now, this is going to be a we'll have to, so let's see. I'm going to see if this is going to be a three-gap play out here. I'll have to do the math on that. I'll do that maybe during, got to see where it really opens up. So the high of yesterday, 97.33, 103.60. So that is what, about a $6 gap. Let's see, the high of this was $63. The low here was $69. So that's about a $6 gap as well. This one takes us back to the last sign of strength inside of Splunk, which was November 22nd. 2013. So it looks like we're going to get a gap up, but not a three-gap play to the upside inside of Splunk. To the downside, you've got Decker's Outdoor leading the charge, off about $11 right now, close at 84.67. DECK is the ticker symbol. Let's go see what that is trading into as this gets ready to open out here. Decker's Outdoor. I guess their big late claim to fame was bringing the Aussie UGG shoe. And UGG, I'm assuming it's UGG because it's an ugly shoe. Is it not? Or is it just me? Of course, I'm in the South, so maybe it's nice and warm and cozy out there. We don't have much need for that here in Florida. Thank goodness. I did when I lived in Detroit, but, man, thank goodness I don't need that. In any event, it is trading out right now at $73. This thing here is coming back to its last breakout session. Doesn't look like it's going to form the island of island reversals, much like Best Buy did. Of course, if it were to gap down somehow and get below 66.47 at the open, it could, but does not look like that is the case. Nonetheless, this looks like it probably will make its way all the way back to the original breakout around the 70.45-ish level. It does have a first area of support at 66.30. We'll see if, in fact, it can handle that. Medivation, MDVN, is out with numbers here. It looks like they've got a loss of 3 cents versus 43 cents, so they are paring down the bottom line. Nonetheless, they are down here about $11 as well. They closed at 84.52. Medivation right now trading out at 73.55. Let me see where that is going to move down to. MDVN is the ticker symbol. That is going to take on a swing point. This thing has a high volume low out here at $48. Quite a ways down. We'll see what this thing does here at the open. 877-927-6648. Futures off just a bit out here. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow trading off 6 points, trading out at 16,266. S&P flat, trading out at 1854. Composite up 4 points at 43.23. Russell 2000 up about 2 points, trading at 11.89. Apple up $2 right now. Microsoft up 2 pennies. Leading the charge, the upside is Mercado Libre. Just behind them is Salix Pharmaceuticals. SLXP is the ticker symbol, up about 9% this morning. Splunk just behind that, up $7 and change, up 8%. 58 Communications or Com. WUBA, WUBA, 58 Com Inc. What do these guys do? They are a technology company, operate classified advertisement services underneath the name 58.com out here. They are out with earnings. They generated net income of $10 million. Versus 4.8, so a nice beat there, and top-line revenue not too shabby as well. $45 million versus 24.7 out there. We should see what their stock chart looks like here. Give me a moment here. The ticker symbol is WUBA. Let's put that up on our screen here, see what it's trading into. Certainly doing nice with regard to their fundamental, WBU. I put WUBU, but that doesn't work. If you put that in your system, you'll get the same results that I did. That's called a blank screen, and so you don't want to do that. Now, this is an IPO, came out back here October 31st, the low of that trading session, about $21, high 27. Two even Steven numbers out here. Right now, it's taking out a swing point. Looks like it may be able to do that with volume. Setting up its second A to B equals CD to the upside. Boy, you like to start off that way, don't you? You're going to start off and do an IPO. You'd like, here's the first A to B equals CD. Their IPO date coming down to that $21 area. Makes a high out here on November 22nd out at $38.70. Makes a retracement, looks like about a 0.6 retracement. 1-to-1, A to B equals CD. Takes it to 45.34. It didn't hit that number. It hit 45.60. You got to love it. Now, if it can take out this B point with some volume, this would set up its next A to B equals CD to the upside. The A point being December 4th. 27.66. The B point being the January 16th level at 45.60. Only 344,000 shares on that trading day. Today it has already done 378,000 shares. So long as WUBA 58.com Inc. or 58com Inc. Is able to close about 45.60, its next move ought to be up to, well, it's almost done at 49.49. I would say gapping up into a D point, this would really be looking more like 54 and a change out there. That's what's going on with that equity. Now let's take a look here. Let's see here. Where are we at? We're just at the market open. Now, this is our long segment, so we ought to do it now here because we're going to run out of time before we know it. So the month is ending. Let's go take a look at the different charts out here and see where we're at. Let's first start off with, I'm going to start off with the New York Stock Exchange. Now, this is the monthly chart out here. And back as it was making its highs on the monthly chart, back in 2007, it had that price relative strength divergent pattern out there. All of you, many hundreds, thank you so much. I'd like to get it up to 1,000. We're not that far away. So if you have not downloaded the special report that I did on major market tops and bottoms, please go over to the homepage of TFNN.com and do that today. Don't delay that. Get over there. It's on the front page. Over on the left-hand side, you'll see a little up and down arrow key. Hit the up arrow key or what have you. It's the second from the top, I believe, right now, because first from the top is the workshop that Tom O'Brien and David White are going to be doing for the art of the chart software out there. In any event, let's get back to the New York Stock Exchange. Now, we don't have any price relative strength divergence inside the NYSE on the monthly basis. We do have it on the weekly basis, but we're going to take a look at the monthly chart first here. What did occur last month, that was January, was you got this little bear sash candle. Bear sash, bullish engulfing, very similar. In this case here, still a reversal signal. That says the high of the two sessions is your resistance level. Well, the high of the candle here from January was at 10,401.77. The high from the prior month was 10,406.77. So 10,406.77. If, in fact, the New York Stock Exchange is able to close above 10,406.77, do that today. Number one, it will have broken out. It will be above resistance out there. And, by the way, unless there is just a total drop off the face of the earth out here, reversal signals inside of the New York Stock Exchange basically don't exist. Now, look, you still have to use that as resistance. It's just the way that it is. But that candle, that bear sash candle, has basically all but been eliminated. Meaning it's really lost its meaning out there, and that is in the New York Stock Exchange on the monthly. If we take a look at the daily chart out here, now that's a wider swath, the wider breadth of the marketplace, and so therefore that is very important for us to be paying attention to. If we take a look at the weekly chart out here, this is the daily chart. I don't know why I went to daily. I meant to go to the weekly chart out here. If we take a look at the weekly chart, just got that price relative strength divergence. It was this pattern right here that gave us the reversal signal. That was this candle session that was back the week of January 24th out there. Again, the high of that is at 10,401.77. You are not trading above it here just yet, but give it some time. That Euro-Japanese yen, folks, that thing took off for the moon. The daily chart is saying, these markets basically have the energy now, the fuel in the fire in order to move higher. And it's the end of the month out here, so it would be if they're not able to, that would send an important message of, are you kidding me? Really? After everything that you were just giving out here. So be careful. Be careful if you are short, because if you're short, I'm not seeing the signals out here, certainly on the longer-term charts out there, and certainly when it comes to the currency pairs. Now, let's take a look at the NASDAQ composite. Let's take a look at the weekly chart out here. This, too, had the divergent pattern. It is now above that. This is the week right here. This was the important week because the high, the bearish engulfing candle, and some confirmation that took place January 24th on that pattern. You had confirmation with follow-through to the downside the very next week. The high of that session here on January 24th is 4,246. Or 42.46.55, and guess what? You're at 43.18.93. So unless you're going to see a colossal failure today, that pattern is saying moving on up to the top side. That's on the weekly chart. On the monthly chart, there is, I don't recall if there's even any kind of significant. The monthly chart does not have the last time we saw a bearish reversal signal inside the NASDAQ composite was all the way back here in October in 2013. That's how far back you have to go inside the composite in order to find that type of reversal signal. So that's on the monthly chart for the composite. Let's take a look at the Dow Jones. Let's take a look at the Dow. That's up next. Dow's up, by the way, it's up 35 points right now. The S&P is up 5 points out here. We take a look at the Dow. Now, the Dow's been a weak link out here. It needs to, in order to clear its resistance level, that's the month of January. Now, the mere fact that the Dow is where it is right now which is has taken back most of the losses in January. This bear sash candle basically goes away the way that I take a look at it. You've had no follow through. If we go ahead and blend these two candles together, meaning February and January, that would not qualify as a bear sash candle. So that is waning out there. If we take a look at the the weekly chart out here for the Dow, let's go see what we've got inside the Dow. The Dow's got that bearish engulfing candle. Now that's an active reversal signal, no matter how you look at it. But of course, at the bottom here, at the lows. Those lows come in the week of February 7th. You've got that hammer candle, and that says that low out there at 15,340 is very key, very critical to being able to hold that level. Resistance inside the Dow is going to be that high. It's going to be looks like the high of it looks like it is the high of January 24th, which is 16,520.60 out there. That is not the high. Everybody talks about the high of December 31st, I believe, inside of the Dow. That's up at 16,588.25. Other than being a swing point, it's kind of irrelevant. That's not resistance, other than it being a swing point. Resistance truly is this bearish engulfing candle on January 24th. So that was the weekly chart for the Dow weekly and monthly. Let's take a look at the NDX. Let's go see what's going on inside the NDX 100 on a weekly chart. As we can see right now, it did also have back on January 24th, it also had that price relative strength divergent pattern. That was virtually eliminated here February 14th. So as what was that, a week ago? No, 2 weeks ago. So 2 weeks ago, that pattern was eliminated as we saw it close above that bearish engulfing high. Now the NDX 100, granted, is making higher highs right now, doing it on less relative strength, but that alone is not a reversal. That is just nothing more than an indication as to what it is doing out there. And until you see a reversal candle, it just simply is, it's just interesting to know what the market is doing on a monthly basis out here. If we take a look at the monthly chart here for the NDX, we're going to see that is had no reversal signals out here. When was the last time we saw one inside of the NDX 100 on a monthly basis? That takes all the way back to October 2013 as well. I want to make sure it's 2013. Yeah, it is, not 12 out. No, that's October 2012. What the heck am I talking about? Yeah, so it's been in the composite and inside the NDX 100 on the monthly chart. You've got to go all the way back to October of 2012 before you saw your last bearish candlestick out there. And those are important. Those are the sign builders in the market. Those are the bulls and bears. They leave signs for you all the time. You want to be able to make sure you learn how to read those signs. Let's take a look at, so we did the NDX now. We've done the New York Stock Exchange, the Russell 2000. Let's do the Russell 2000 versus 1,000 or 3,000 out here. Let's take a look at the Russell 2000. Monthly chart's going to show up on our screen. So if, in fact, the Russell right now, which is trading at 1187.90, the bear sash candle from last week, that would be resistance. That's at 1182 out there. You close above 1182, gone. Now, virtually gone anyways, but boy, you close above it, and then it just kind of, old resistance ought to become a new support out here. That's the monthly chart for that's the last time we saw a bearish reversal signal inside of the Russell 2000. My goodness. On there's a hanging man candle out here, but I do not consider that to be a bearish reversal signal, not one that you would trade off of. That takes you back to, May of 2011. You really have to come back. The one that had some meaning in my book is the one that was in May of 2010. That's how far back you have to go inside of the Russell 2000 to truly find a reversal candle on a monthly chart out here. Continuing on with its red signal markers, those are the Rhodes momentum indicators out here. Nothing but strong bullish moves to the upside. That's on the monthly chart. Let's take a look at a weekly chart for the Russell, see what it's got going on out here. Weekly chart also having that price relative strength divergent pattern on a weekly basis, January 24th. That high, as you can see, you're trading above it. That high, again, being 1182 even Steven. You're at 1187.90 right now. You close above it. It basically avoids that entire pattern. That doesn't mean that a new one can't set up, but that pattern there that was confirmed is basically, as long as you get a close above the 1182 mark by today, that's basically gone. There's nothing to worry about. I don't know that I'd say nothing to worry about. You always have to worry. If we take a look at the SOX out here, let's take a look at the SOX index. We know that thing is off to new planetary areas. This thing is over its resistance level that's never had a price relative strength divergent pattern in it. Its resistance area was the bearish engulfing candle, however, from January 24th. That high was 547.92. It's a weekly chart that we're looking at on our screen. It's trading out at 564.22 out here. It did lose its, it did give a message that it's kind of losing its way out here. A little high wave candle last week. The same thing is formed right now as we're trading out at 564.22. Those are not reversal signals. They are merely just telling you, hey, the market's maybe getting tired. It's kind of lost its way out here. That's all that it's saying. It's just waiting for everybody else to catch up. It's tired of dragging the laggards. Let's take a look at the S&P 500. Let's go see what she is doing here right now. The S&P 500 also trying to take out the reversal signal from January 17th. Out here, that high is at 1850.84. You're above it at 1854. That says that it is now above any kind of resistance inside of the S&P 500 on a weekly chart. You're above resistance. That means that should become support. On the monthly chart here for the S&P 500, monthly chart shows us right now that there was a bear sash candle again, just like taking a look at the some of the other indexes that we have. That was from January, basically void, null and void as we speak here at the moment. A lot of time left in the trading session, but you know, if the selling is going to come from somewhere, it's not because of something that's going on inside the currency market, at least not just yet out here. And that is a great indicator as to where the market wants to head to. So on a monthly chart, everything looks pretty hunky-dory out here. That's inside the S&P 500. Hey, why don't go take a look at the XAU? We might as well do that as well. No, maybe I didn't do the S&P on a weekly chart. Maybe somebody's saying, hey, Steve, you didn't do the S&P on a weekly chart out there. Let me do that. Then we'll come back to the XAU just so that I'm thorough. And if I did the weekly chart already, yeah, I did the weekly chart. What am I thinking? I did the weekly chart. Now, let's go take a look at the XAU. Let's take a look at the XAU on a weekly chart. Let's go see what we see out here. Actually, on the XAU, let's put up my other tool. Now, the XAU here showed that price relative strength divergent pattern to the bottom. That was confirmed with a bull sash candle on December 27th. That was confirmed with additional follow-through out here. That took place the week of January 3rd, 2014. This week here, we're getting a bullish engulfing candle, so we're up into the resistance zone inside of the XAU, but still looks pretty darn good. PDG to me. Dow's up 39, S&P is up 5. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. Dow's up 39 points. S&P is up 5 as we check in on the VIX index. It's trading out at 1399, so the coast is clear there. The 50-day exponential moving average, that's what we use as our gauge for pressure inside of the markets out here. That's trading out at 1475, so the coast is clear out there. You know, New York Stock Exchange, let's go take a look at the daily chart out here. You've got pretty decent market breadth this morning as we are trading. It's up 24 points, but you've got advancing issues, outpacing declining issues, nearly 2-to-1, not quite 2-to-1 out here. Nonetheless, 10,387.17. That's clearing the 2007 levels out there. If you clear the highs out here at 10,426.94, that's what was put in back on the 24th, so 4 trading sessions ago, and you're at 10,423.39. That is certainly bullish news out here. So let's go take a look at the weekly chart here for the New York Stock Exchange. It's the only index that is, well, it's now the last index to get above the 2007 highs that we track here, obviously, in the U.S. Where is my weekly chart out here? I don't want to switch this one and lose some of my other data. That's been known to happen. So let's take a look. There's the monthly chart. So on the monthly chart, look, on the monthly chart, you can see the highs back here in 2007. You're closing above that. That is important. Now, what's really important is as it closes out the month of February, that means the month of March, even if it comes back and tests it, you want to see it stay outside of above the high of 10,387.17. So that's the number we need to watch like a hawk out there. You come back, you test it, you reject it, and then it's off to the races. And the off to the races inside the New York Stock Exchange, whether you want to hear this or not, it is what it is. If it's a consolidation pattern, and it is 6,000 points north, that would be 16,429 would be the eventual target number inside of the New York Stock Exchange. So let's just have a party. Let's just make that happen. The New York Stock Exchange out there. What else should we be looking at here in the markets? Let's take a quick peek here at Goldilocks and silver right now. Not a whole lot moving out here. The case of gold, after forming that key reversal session 2 trading sessions ago, no real follow-through yesterday. Of course, no real follow-through today out here. So you have to say it's PDS. It is pretty darn strong considering. Now, it still is a reversal pattern. It's not as if it's taken that out or anything, but ideally what we'll see is a gold move back somewhere into the 1304 type range out here, get down to the bottom of this rising price channel, and that likely would be the next place to go ahead and put a trade on. But so far, pretty strong. Inside of silver out here, that's trading out at 21.29. That did break a trend line out here, a channel line. That's what I've drawn along the bottom out here. Yesterday's doji candle, today doji. To me, they don't mean as much. They only mean something up at the resistance levels. We're not at a resistance level here inside of silver. Resistance inside silver, though, is the 50-day exponential moving average. That price point is $21.91 out there. Light sweet crude right now. It is trading off just slightly, just an inside day. The key to light sweet crude now is going to be this candle session from February 18th, the low of which is 100.23. You close below that, and it does spell curtains for light sweet crude. Natural gas, as we take a look at the April contract out here, got a little bullish engulfing candle forming here as it made close to the 0.618 retracement level, down at about the 437 area. You only got to 444 yesterday out here. Maybe this is actually forming. We'll have to see what kind of volume we get on this bounce out here, but this could be setting up the B to a C of an A to B equals CD down, and that is in natural gas out there. Folks, stay tuned. The Nadex Bull Bear Binary Option Hour is up next with Tom O'Brien, Daryl Martin, and have a terrific Friday. Have a fantastic weekend, and I look forward to seeing you bright and early Monday morning. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.